presentation contains current opinions of Moise Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor, and are subject to change. Nothing in this presentation should be considered investment advice. We make no assurance that Mo's opinions or illustrations will accurately predict future prices or financial markets. In no event is past performance a guarantee of future performance. A detailed disclosure can be found at the end of the presentation. And now here's Mo.
Hello, everyone, and welcome to the YouTube update for June the 11th, 2024. I'm Mo Ansari, President of Compak Asset Management. First of all, I want to remind all of you of all the communication we have from Compak. Go to compak.com/media, subscribe to this YouTube channel. Whenever I do post an update, you will be notified. Also, you'll get notification whenever we post the weekly podcast. You also get the newsletter. You also get all the communications whenever we do webinars, seminars, all of the Compak communications. They're all free. All of them are there simply by going to compak.com/media. For the week, S&P last week was up 1.36%. Today, on Tuesday the 11th, we hit a new all-time high for the S&P and the NASDAQ. But the problem is the small caps. They're not going along. They were down 2% last week. But the NASDAQ right in our target area. I've talked about that for the last couple of years since we had the projection on the weekly charts, which I will show you later on. Looking at technology, continues to lead the week. For the week, it was up 3.8%. Utilities were the worst, as they were down 3.8%, because interest rates, there's a lot of talk of what the Fed will do or will not do tomorrow. Are they going to raise interest rates? Well, I don't think so. Nobody expects that. But they are going to put out their dot plot. What are the expectations? 1 rate cut, 2 rate cuts, or 3 rate cuts between now and the end of the year, or none? I think everybody's focused on what the Fed is going to do, but tomorrow morning we get the CPI. That has been sort of very stagnant over the last 3-4 months. It has not gone down. It is sort of just staying there. If you look at oil prices, they were sort of coming down last week. Interest rates were down, about from 4.51 the week before. We went down to 4.43, which is a good sign for the market overall. I think a better way to look at it is money supply. How much money is floating around in the system? You can see the Fed started to pump money in right after COVID, went up dramatically, it fell down. You can see it has sort of just going sideways, the money supply. And I think that tells us a lot more about inflation numbers. And tomorrow morning we get the CPI number. And that is, I think, going to be much more critical of what to expect from the Fed. There's a July meeting in the Fed after tomorrow. Then there's a September meeting. Now, it depends on how the inflation numbers come out tomorrow, or what the expectations are going to be for the Fed is going to do. Are they going to cut in July, September, and so on? Or are they going to have September and later on in the year, or no rate cuts, depending on inflation? I think that is what we have to watch. And I think it's all data dependent. That's what the Fed is going to say tomorrow. They'll keep an eye on how inflation comes out, and that will tell us what to expect. Looking at the news, we get the CPI. The May CPI consensus is it'll be up 0.1%. And we'll see how that comes out. That's going to be, the core comes out, also CPI core, it's up, expected to go up 0.3. We'll see. Initial claims, 225. Last week we were at 229, about the same. And we did get non-farm payroll last Friday, which was stronger than expected. So the labor market is holding up really well. And that is, I think, what is driving the Fed, that they're not in a hurry. They're saying as long as unemployment rate remains low, there's no pressure on the Fed to cut rates as long as inflation is being stubborn. That's the way that we're looking at it. Then we get the PPI on Thursday. That's the producer price index. And then we get the import-export prices, which is not significant. Looking at the technicals, we have broken above the 53.40, 53.10 to 53.40. That was the target from this third wave high. We are trading at 53.67 this morning and probably going to close at a new all-time high if you do close positive, which is good. Now the projection for the fifth wave now goes up to about here, which is about 5,500. We'll have to wait and see, and I think that depends on the expectations of what the Fed is going to do. But we are at a fifth wave, which is usually the end of the move to the upside. Wave 1 up, 2 down, 3 up, 4 down, and 5. That's the cycle we go in, and that's what I'm looking at right now. Looking at the weekly chart, wave 1, 2 down, and wave 3, we get a fourth wave correction somewhere. Support is right at the 20-week moving average, and then the 50-week moving average. 51.65 is the 20-week, and the target becomes somewhere around between 5,100 and 5,000. That is significantly lower than where we are now at 5,300. So we'll have to wait and see when does that correction happen. We're still in the summer doldrums. August and September are usually the worst months for the year, so we will see. NASDAQ, new all-time high today on the closing. We are again on a fifth wave high on the dailies and the fifth wave on the weeklies. Weekly target 17,125 to 17,700. That was the projection from October of 2021. That was nearly 2.5 years ago that we were looking at this projection of 17,177. You'll have to wait and see. Well, we hit 17,773. So we're right in the middle of this range right here. And that was the projection that we were looking at. Right about here is what the projection, that's right in the middle of. So we have satisfied the fifth wave on the weeklies. Again, NASDAQ has been leading. NASDAQ falls off. That could be a problem for the entire market because NASDAQ has been pulling up the S&P, and the large tech stocks have been pulling up the S&P and the NASDAQ to new all-time highs. Today we had a big day, 7% move in Apple, and that obviously is a big contributor to the entire market. Interest rates hit the high. That was the target we talked about right here, 4.8 to 4.7. We got as high as 4.7 right here. Then we backed off from there a little bit. We got to 4.75 right in the middle of this resistance area. Now we've come down and we've gone basically back and forth, trading between 4.43 to about 4.35, right in this window between the 20-day moving average. Today the rates were down to 4.40, and that was positive for the market. Crude oil sort of drifting after making the high. We've drifted down. Looks like we've made a fifth wave bottom. But that can be extended if this market comes back down. But we got down close to $72 a barrel. We're trading around 78 today. Come back up a little bit, just back and forth, I think, as I've mentioned. Gold prices, small cap, that's having a tough time. It hit this high for about 212 and backed off from there, got close to the 200-day moving average right down here, and we went back up. Now just going the ABC back and forth, up and down move that we're seeing, and that is just sideways between 212 and then about 190. So that's the move that we're seeing on the upside and the downside. The markets are just sort of sideways until we get some more clarification from the Fed. As you know, interest rates have a bigger impact on the small cap than the large cap. Gold chart 2280 to 2500. We exceeded this high. That made us the fifth wave top right here. From there we are just, I believe this is just an ABC that we're going back and forth a little bit. That's what we're seeing right now in this market. Gold 2500 is the top, and about 2100, 2200 is the bottom in the market. That's what we're looking at right now. Again, don't forget to subscribe to all of the communications. Those are my views. If you want a much more detailed update, we are going to do a podcast today, and we will bring you up to date in much more detail on what we're thinking and what we're looking at. Have a wonderful week. I will be back next week. Until then, good trading.
This presentation contains the current views and opinions of Moise Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor. The views expressed are current only as of the date of this presentation and are subject to change. Nothing in this presentation should be considered investment advice, and nothing is personalized to any investor's individual circumstances. Compak Asset Management offers investment advice only after entering into an investment advisory agreement and gathering client-specific information about goals, objectives, financial status, and risk tolerance. This presentation uses terminology associated with technical analysis and provides charts to illustrate some of the concepts discussed. Technical Technical analysis is a security analysis method with the goal of forecasting the direction of prices of securities or market indices through the study of past market data, primarily price and volume. We make no assurance that past performance or the use of technical analysis will accurately predict future prices. Further, a risk of technical analysis is that overfocus on historical patterns could lead to ignoring or downplaying security-specific concerns, overall market or sector concerns, or other factors because we assume inaccurately that historical patterns will repeat themselves. In no event is past performance a guarantee of future performance.